Well, the market ends Thursday with minor gains as the RBI kept policy rates unchanged. However, the Nifty and the Sensex saw its biggest two-week gain in the last 8 months. On today's editor roundtable, we will put the spotlight on why brokerages are betting big on India and the broader market underperformance. I'm Sonia, and with me we have all the editors, Prashant, Nimesh, Nigel. Folks, after a long time, we can say that the bulls are heaving a sigh of relief. It was a good week, and we're heading into a long weekend, so nothing to complain, right?
But the bulls will be unhappy that, there is a momentum, and now we are a break. Again, we have a break. So, a bit of disappointment for the bulls, but yeah, truncated week. So, happy, good for us because we can then, have some of the weekend plans. So,
and next weekend as well.
Again, next Friday holiday. So,
it's a chirpy, nice feeling, right? When the market it goes up, portfolios look better, and you go into a weekend, and any activity that you undertake, I mean, it seems a little better.
And you don't have to pay more on your EMIs or loans because the RBI also paused.
Never a dull moment, right? I mean, who would have thought? We had that RBI discussion on Bazaar yesterday, and the consensus was 25 is a given, and change in stance, maybe it'll happen, it'll not happen. There was no hike and there was no change in stance. I mean, it was actually exactly the opposite. So, but it's a tricky one, right? I mean, what happens from here on?
Yeah. The governor put it perfectly, right?
Yeah.
You need to look at it ball for ball, and on every ball he'll take it as merit. So he'll bat it according to its merit. So let's see how this goes.
He paused, but I think how many times? I wanted somebody to count how many times he said that we are not done yet.
It's not a pivot.
Yeah, it's not.
I think 20, 30 times he must have repeated. Did not want to give the markets the impression that, well, rally on, everything is well, etc., etc. So let me just quickly, for our viewers, outline where we stand now in terms of the market. So the last 5 sessions, right? If you take the close from the 28th of March, that's 5 sessions. The Nifty is up 4%. The bank Nifty is up 4%, roughly about 4%. The small cap index is up a full 6% in just 5 trading sessions. The mid cap index is up a little lesser than that, actually exactly half of that, about 3%. So it's been a decent move. Even before that entire SVB and bank crisis, people have been waiting for this quote-unquote tactical rally. I mean, if you remember, Nareen mentioned that it didn't happen. The bank crisis in the US overtook events. Then it moved on to Europe. But now I think we are finally at the point where the markets have broken out, not entirely from the big range, the downward sloping range, but this is indeed looking much better now. Let me just, so the RBI has paused, but it sounded hawkish. And I think the implications of this will continue to be debated, whether this is a pivot, this is a pause, or this is an extended pause. What happens if the Fed comes and hikes? Will the RBI have to rethink, etc., etc.? US data is starting to come in very soft, very nicely soft data, which I think is, which at one point was markets would have celebrated, but not anymore. Equity markets are not celebrating because they're saying, well, this is telling you that there is a big slowdown which is coming. The final big data point is the jobs report, which is tomorrow evening. Either it will reinforce these dovish expectations or, I mean, it will kind of throw up a surprise. Either way, I think it's going to be important to track. So on the Nifty and the Bank Nifty, just 2 levels. So, to start with, before I put the levels, unless and until you get a big negative daily close, I think the chances are that the uptrend perhaps has a little bit more to go on the upside. We've not had those big sort of red bars on a daily close for at least 5 or 6 sessions now. Let's hope that remains the case. On the Nifty, 17,615, the level around which the Nifty spent the maximum amount of time today, I think is the important level. It's about 15 points away, but that's the 38% retracement of the entire fall from 18,887. The 50% retracement after is straight away at 17,858. It's so another 270 points away. On the Bank Nifty, 41,200 is the first resistance, and then you got 41,382, which is the 50% retracement of the same fall from the all-time high for that particular index. So I think, as Nigel also said, and the governor said, take it ball by ball. Hope that positive cues keep coming in. Global markets remain steady. And 3 days later, when we come back on Monday morning, we are handed okay kind of cues.
Oh, absolutely. And the bulls are sort of rising from the ashes, right?
Yeah.
I mean, after a long time, we've got buy calls in India. But as they say, markets make opinions and not the other way around. So a lot of positive opinion coming through after the market has staged a bit of a recovery. So just wanted to first talk about the buy calls. In case you missed it, in the last fortnight, there were 3 big brokerages that upgraded India. Goldman Sachs, Morgan Stanley and Bernstein. Now, all three brokerages are making the same point that valuations have now become attractive in the Indian market and it's a good time to buy. It's a good time to put money into quality stocks, especially the ones that have fallen. Goldman Sachs says that MSCI India is now trading at 19 times forward PE, which is close to their fair value estimate of 18.5 times, and they have a 12-month Nifty target at 20,000. Bernstein says the same thing, that there's been a severe underperformance that India has seen in the last 6 months compared to emerging markets. Now the time has come to reverse roles. And Morgan Stanley, Jonathan Garner, upgraded India recently. Now we decided to look at some numbers to see what the underperformance has been like. So here's the data coming up for you on the screen. The Nifty has underperformed almost all its global peers in Q4 of the FY23. If you look at it, the Nifty is down 4% in Q4 of this fiscal compared to, say, Kospi, Hang Seng, which are up about 3 to 10%. The Taiwanese index went up 12%. The Dow Jones was up 0.3%, and a couple of the other markets like the Russian markets were also a tad bit in the green. So in that context, the Nifty is severely underperformed. The MSCI India index commanded a premium of over 109% over MSCI emerging markets in October of 2022. That premium has now reduced to 62.6%. So the premium with its peers, with the emerging market peers, has also narrowed, which is making it more attractive as a buy call. And if you look at it compared to its own historic averages as well as compared to the MSCI emerging market index, the Nifty is trading currently at about 17.5 times. The MSCI India index is trading at about 18-19 times. So still a tad bit cheaper. So the valuation game is something that, most brokerages are betting on.
All right. That's about the Nifty and the frontline indices. But Nimesh, you have done some study. FY23, everyone said it wasn't too bad for the Nifty, but a lot of pain there for the small caps, right?
Oh,
Tell us more about that.
So that is a big story. While the index level, it may not show the right picture, but if you look at the individual data, that will show you as to how much pain that was there for individual portfolios. Let me just put this data on the big wall, and I'll show you the exact number and what happened in the broader markets. If you look at the broader markets in FY23, look at the Nifty Nifty mid cap index and the Nifty small cap index. The Nifty mid cap index is actually up 1%, and the small cap index is down 14%. But the devils are in the individual names. If you look at the individual stocks, there has been a massive hit in the portfolio of a lot of the individual companies, and everybody has burned the fingers. Even BSE 200 is down, BSE 500 is down 2.5%. But look at the individual names. That will show the real picture and how pain it was for a lot of individual portfolio investors. So if you look at the big losers of FY23, this is the mid cap losers. TTML is down 66%, Gland Pharma is down almost 60%, Laurus Lab 50%, Trident India down, Emphasis down 45-46%. Piramal Enterprises is down 44% in this year. Vodafone India down 40. Sona BLW, one of the blue chip names, that was down. So there's a lot of hit in the mid cap. Similar is the case with the small cap stocks as well. The Brightcom, of course, it's not something which we talk about, but Tanla Solutions is down 65, Intellect Design down 54, BS is down 55%. Ember Enterprises is down close to 50 odd percent. Graphite, Lakshmi Organics, lot of stocks are down between 40, 50, 60% in the small cap indexes as well. So that's the kind of pain which investors have seen in 23. But there has been some gainers as well. I'll just put out for few big gainers within the small cap basket. Mazgaon Dock almost 2 times. Karur Vysya Bank down up almost 100 times. RBNL is up almost 100 times. And even UCO Bank is almost doubled in the last 1 year. But look at the public shareholding of the mid cap and small cap. That explains that there is a lot of hit to the individual shareholders, the public shareholders. Look at the public shareholder list. Laurus Labs, 72% is held by the public. Intellect Design, that stock is down 50 odd percent. There the public holding is quite high at almost 70%. Same with Tanla Platforms, the public holding is quite high, 56%. Vodafone 50%. Nykaa, which is down almost 45-50%. There is a big public holding of 47-48%. So there is a large basket of mid cap and small cap where the public holding is quite high, and they have fallen sharply, and that explains the kind of pain which was there in the broader markets. Not only the individual investors, but even some good fund managers and portfolio managers have seen the pain of mid cap and small cap in FY23. The big question is, now with the RBI pause, can FY24 be different? So that's something we need to track. But there was definitely big pain in the mid cap and in the broader markets for portfolio investors.
Okay.
Nimesh, thanks very much for that. And that's the question we're going to put to one of the best stock pickers in the market out there. Sunil Singhania needs no introduction. He's founder of Abacus Asset Management. Sunil, great to have you with us here. What is your own prognosis? When will we start to see good things coming through for the broader mid-cap and small-cap universe, and what will be the trigger for it?
So actually, if you see, after the initial scare of 2020, we had great 18 months, particularly for the broader markets. So the second half of 2020 and almost the entire 21, you had the broader markets really go berserk. Small caps I think did very, very well in 20 as well as 21 with 100% plus returns in almost both the years. And I think to some extent this underperformance over the last 1.5 years has also got to be seen from the fact that they had moved up too much. So first part of the correction was they coming back to normalcy, and obviously when the markets are uncertain, the broader markets and the smaller stocks tend to react slightly more. But as we speak, I think what has happened is a combination of 18 months of negative returns and at the same time 5-6 quarters of earnings. I think valuations are now looking much more digestible. And now when you look at companies, you have 30, 40, 50 stocks, which you can actually see that, okay, it's good level to buy, which was not the case maybe a year back. So I think going forward looks pretty interesting, and I think the markets are already reflecting that. If you see the last 4-5 days, they're already first signs of revival, at least in the broader markets.
Sunil, first of all, thanks for braving all that traffic and reaching us. It's really it's a tough job.
Mumbai, so it's always a way of life.
That's our common topic, right, to complain about. But yes, we were having a chat with, I think, Ashwini Agarwal earlier in the morning, and he was telling us that at best this is perhaps a tactical rally that the market can see. There's no real reason for the bull market to resume. Would you concur with that view?
So one is a disclaimer, you've always been optimistic, so my views can be taken with a pinch of salt. But I think we are heading into a great second half of 23. The headwinds internationally or globally in terms of high inflation, high interest rates are looking very, very decisively behind us. Ironically, March you had so many banks go down under or almost go down under, and yet the yields of 10-year in US are down to 3.3%. The 2-year yields from 5% are down to 3.75%. In India, from 7.4% we're down to 7.2%, and rupee, which was flirting with 83, is now down below 82. So I think a lot of these macroeconomic factors are coming back as a tailwind rather than a headwind, and I think that we should see in the second half. The other thing is a lot of demand got compressed. A combination of fear, a combination of also huge swings in input costs, raw material prices. I think that is also now stabilizing, and particularly when you look at Europe, households did not have any free income left after paying for the high heating oil prices. Now, one, you are away from the winter season, and second is the prices have also fallen, and you are starting to see a little bit of revival as far as discretionary spend is concerned. So our view is that second half globally should be pretty decent. Or you marry it with the fact that the risk aversion is at the peak. Gold is at an all-time high. You have assets under management in money market funds in US cross $5 trillion. Both these are clear signs of risk off. So when you have a combination that the headwinds can become tailwind and massive risk off, I think slight improvement in sentiments can lead to good uptick. In India, we are not cheap, but we are cheaper than what we were earlier.
Yes.
And I think when we speak to companies, things are okay. They are not flourishing, but they are not bad. So I think we will be constructive. The definition of bull market will have to change. We don't see a market going up by 50% or 100%. But I think decent returns should definitely be.
Okay, we have to take a short commercial break, but we'll come back with lots more questions for Sunil Singhania on our show, Editors Roundtable. Stay with us.